This week, we saw a huge surge in the number of active listings in the U.S. The number of active listings increased by 9,470 homes, while last week, that number only grew by 343 homes. So today, we'll discuss why these swings have been so extreme the last few weeks. Mortgage rates, of course, remain high, and they were stuck bouncing between 7.2 and 7.3% last week. Historically speaking, now that Labor Day has passed, the market should be slowing down from now until January. But don't let that fool you. We are still firmly in a seller's market, and you still have to be actively looking and ready to go if you're looking to buy a great home. However, if you're looking to buy an ugly house, you'll be seeing more and more opportunities from now until January. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties. We're looking at trends, which cities and zip codes are the hottest if you may be a seller looking to get top dollar, as well as which cities and zip codes are the coolest if you may be a buyer or investor looking for an opportunity. We're also tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand is going to look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes had price decreases, and what's inventory looking like. And if you stick around until the end, it's my favorite part. It's the top 10 ranked charts where I rank the top 10 hottest and coolest both cities and zip codes in all of Dallas and Collin County. If all this sounds like something you're into, make sure to hit the subscribe button. And if you're looking to make a move in the Dallas area, whether it's next week or next year, I'd love to connect. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is September 18th. Let's see what the data is telling us. And if this is an old video, you can click the playlist here and it'll take you to the latest weekly update. First up is always market news. As we discussed in last week's video, inventory only went up by 343 homes in the entire country. But as I said then, 1 week is not a trend. We need to wait and see what happens next. Fast forward to this week and we saw an increase of 9,470 active listings, up from 343. What could cause such a huge jump? Well, you may have guessed it, Labor Day weekend. Holidays make for weird numbers. So if we were to take out the holiday week and average out those two numbers for the last 2 weeks, it would be like we saw an increase of 4,906 homes per week. Now, in a normal market, we would hope to see somewhere between 11 and 17,000 homes at this point in the year. So we're still a very long way from that, but it's also really good to see that the 343 homes was just a holiday anomaly and not the start of a trend, as well as, even though it's not going up as much as we want, inventory is still going up and not down yet. And you can see this holiday anomaly here on the new listings chart. See how every year around this week we have a dip here and then we have a spike back up. But what's interesting is look how dramatic the dip was this year and how dramatic the spike back up was. It's just like everything else in the market this year. Super dramatic. It's more similar to the blue line, which is 2021, which was a very dramatic year. But if you look compared to last year, this is a much bigger swing than we had. And again, it should be noted by looking at this chart somewhere between here and the next few weeks, or if you look at 2021, this spike was the peak, and then we saw less new listings all the way to the end of the year. But if we look at 2022, we would still have a few more weeks before we see that seasonal decline. So just to reiterate, once this starts to decline, you will see less and less new options on the market every single week until January. Which is why I keep trying to say, don't get stuck thinking that if you wait until January, you're going to get the best deal. In reality, if you've already been looking at the market and having a hard time finding options that you like, there will be less and less of those coming onto market from now until the end of the year. So even though it will look like things are cooling off, prices are dropping, you may not want any of those homes. There will be less and less options. So if you see a great house that you like, you should still buy it. Do not wait thinking that there's going to be a better option at a better price, because those few great homes that do come on, even in January, people are still paying a premium for those. Don't look at the overall data and think that means every house is going to be a deal. Okay, let's move on to mortgage rates. If we look here, we have been in a tighter and tighter range. We had this huge drop last week. We were in the low sevens and immediately we shot up and we've been stuck. We started out 7.22, got up as high as 7.3 and ended the week up from the beginning at 7.29, and that's where we begin this week. And this makes 19 consecutive weeks with rates around or above 7% now. That's more than 4.5 months. And regarding mortgage purchase applications, we actually saw a 1% increase this week of people applying for mortgages, even with rates up near 7.3%. This makes for a total of 16 positive, 18 negative, and 1 neutral print for the year. Seeing an increase in people applying for mortgages with rates up at 7.3% just tells me that buyers understand they don't have an option. If they continue to wait, they may be looking at an 8% rate next month. That's how it's been going all year. If you wait, you have a worse rate. But what I want you all to remember is the rate is temporary. Even if you buy now at a 7.3 or even if next month is an 8%, that number is temporary. Don't let that deter you from buying a great home. Eventually rates will come down and you'll refinance. Okay, now we're moving on to the MLS data. Starting with Dallas County. In the last week, we had 254 closed sales. That's 19 more than last week. 288 homes went under contract. That's 9 less than last week. 474 homes listed in the last week, and that's 23 more than the previous week. 72 of the homes that closed were immediate sales, meaning they contracted within the first week, and that's 7 fewer than the previous week. Total, there are 2,155 homes that are either under contract or in pending status, and that's 88 more than the previous week. Moving on to Collin County, we had 197 closed sales. That's 54 more than the previous week. 158 homes went under contract. That's 46 less than the previous week. We had 267 new listings. That's 24 more than last week. Of the homes that sold, 53 were immediate sales. That's 10 more than the previous week. And total, 1,767 homes are under contract or in pending status, and that's 11 more than last week. So in general, we had more closings, we had more listings, with a small drop in the number of executed contracts last week. Okay, let's move on to housing data. Okay, starting with Dallas County. If you watch my videos, you know what I look at is called the Market Action Index. It just takes all of this information and puts it into one easy to read graphic with a number. Anything 30 and below is a buyer's market, anything above that, and we're just asking how much of a seller's market are we in. Currently, our market action index is a 47.01. We had another drop in median list price this month from 437 down to 430. Median days on market remains at 35. Number of homes having price decreases stays in the same ballpark where it's been for over a month now. Inventory still not a significant climb, but still grinding upwards. And the market action index slowly falling down. So what can we expect moving forward? So if we look, each one of these dots is a 1-year period. So this time last year, we were at a 53-ish, but you have to look, we were coming off of 100 in April. So we came down to 53, and then we got as low in December, January, around 43. So from here to January, we went from about a 53 to a 43. So where are we at now? We're starting at a 47, so if we were to continue this trend, it's likely we would end up below a 40. Is there any way we're going to get to a buyer's market below a 30? I absolutely do not think so. I think we maybe dip down here a little bit lower than last year, a little bit lower than a 40 before we turn back up. I think we're going to see much less dramatic moves because even though our mortgage rates have been going up all year, they've not been going straight up like they did at the end of 2022. Basically all of 22, they just went straight up the whole time. Here it's been still straight up, but at a much slower incline than last year. And if we look way back here to 2018, 2019, what a normal market looks like, in a full year, you would go from like 42 to 39. That's how big a normal market is. And then from 2020 on, look, it's just total insanity. But you can see this year, looking from January at a 43 up to a 56, down to a 47, this is already much more, you can see that we're starting to normalize. It's much less of a swing than all of this was. So it's nowhere near this yet, but it's definitely heading in the right direction. Okay, moving on to Collin County, a bit of a different picture actually. Collin County actually had an increase in the median list price, and it's actually been climbing for a little while now. So we had $599.9 at September 1st, and we're all the way up to $614,450. The median days on market is up at 42. Number of homes having price decreases has a little tick up this week as well. But their inventory has been flat since all the way back here in July. They really have not had an increase in inventory. Market action index as well, just a slow grind down, but I want you to remember that all of this is just because of mortgage rates. The quicker mortgage rates go up, we're just going to keep grinding market action index down. But the second rates drop, none of this is going to matter. Inventory is going to go down, prices are going to go straight up. There are still too many buyers for too few inventory as it is. So when is the best time to invest in something? When demand is at its lowest. When rates are the highest they're going to be, that curbs demand. And when the market action index is at the lowest it's going to be, that means low demand. That's a great time to buy. If you wait for mortgage rates to drop, that's going to make the market action index heat up as well. It's going to be a much worse time to buy because you're going to be competing with a lot more people. So I know rates are high. I know that means your payment is higher than you want. But remember, rates are temporary. You should be buying at the point of lowest demand, which I think is between now and to the end of the year. But that's enough of that. Let's move on to my favorite part, the top 10 hottest and coolest cities and zip codes in all of Dallas and Collin County. Okay, starting out with the hottest cities list, in the number 1 spot remains Carrollton, number 2 remains Louisville, Coppell heats up 2, Richardson cools off 1, Grand Prairie heats up 3 spots, Balch Springs and Garland remain, Grapevine cools off 4 spots. This was way up at the top of the list for a long time. Look, up in here we were in the 80s, and now we're all the way down almost to a 55. Irving heats up 1 spot, Mesquite jumps on this week as the number 10 spot on the hottest cities list, and Duncanville gets knocked from number 9 entirely off the list. So if any of you have been trying to get into Grapevine for the last few years and it's just been too hot, call me up. This might be your time. Now we like to zoom in and look at specific zip codes. The absolute hottest zip code, very surprisingly, is Garland, Texas 75041, followed by Carrollton 75006, Louisville 75067, Carrollton 75007, Grand Prairie 75052, Grand Prairie 75050, Richardson 75081, Mesquite 75150, Plano 75075, and Garland 75040. So if you live in any of these zip codes, you live in one of the top 10 hottest zip codes in all of Dallas and Collin counties. Now moving on, same thing, but the coolest cities and zip codes. Leonard, Texas remains the only buyer's market in all of Dallas and Collin County. It remains at the number 1 coolest spot, followed by Whitewright, which cooled off 1 this week. Sunnyvale cooled off 1 this week. Ferris heats up 2. Blue Ridge remains. Van Alstyne cools off 2. Salina heats up 1, Rockwall heats up 1, Anna remains, and Royce City jumps onto the list and knocks Red Oak from the number 10 spot off the list. Moving on to coolest zip codes, Leonard 75452, that's our buyer's market, followed by Whitewright 75491, Sunnyvale 75182, Ferris 75125, Rockwall 75032, Blue Ridge 75424, Dallas 75203, Dallas 75219, Van Alstyne 75495, Salina 75009. That's it for this week's update. I appreciate you watching. And remember, if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. Call, text, or shoot me an email. All that info is in the description below. Thanks for watching. I'll see you in the next video.